Hi there, welcome to Kneppy Invests. It is Wednesday, the 8th of May, 2024. Time is currently 3:06 p.m. Another roughly hour of trading left. That also includes the closing auction. And if we have a look at what has happened on the ASX today, relatively flat, but I'll talk about that more in a second or so. The rest of this video, I'll do the top 5 announcements of the day. I probably won't talk about the companies that didn't make it into it. So the honorable mentions, I won't discuss those companies. I'll just say which companies didn't make it into the top 5 announcements of the day, and maybe you can look at those companies yourself. And we'll also have a look at some charts, because that's one thing I want to do. Not sure if I'll look at some tweets. That's another thing I could probably cut out of this video. But if you do like me looking at tweets, leave a comment in this particular video. And if you do want to ask me a question, make sure you leave it a comment in this video or one of my other videos, and I'll get answering or replying to that comment on Saturday. Let's have a look at one tweet, because I do have Twitter up here. And this is actually one of the last tweets I actually looked at. The US consumer in one chart: credit card debt versus personal savings rates. Record low, record high. So what's at a record high? Credit card debt, and personal savings is now at a record low, according to Zero Hedge. And look what's happened since 2021. This could be a reason why we're not in a recession, because people are getting more and more in debt while savings levels are going down. So everything is maybe going okay. I don't know. There was another interesting tweet here, or reply. This is probably one of the most interesting ones. This is sort of the yield curve inverting. So whenever you get the 3-month Treasury yield minus the 30-year Treasury yield positive, that means it's inverted. And you can see whenever it's highly inverted, like it was back in the early 2000s, like it was back in the mid 2000s, we then had a recession. And it looks very similar right now to those times. And you can see it uninverted before the American economy went into a recession. So the inversion has been around, the inversion has been around for quite a while right now. So who knows what's going to happen in the future? This is all speculation at this point in time. Some people are fairly bullish. Some people are fairly bearish. And that's the most exciting thing. Oh, there was another one. I've just noticed here, Stanley Druckenmiller is trending. And I actually did bookmark this one. Here he goes. Geiger Capital, must watch. Stan Druckenmiller on Bidenomics and the current government deficit. If I was a professor, I'd give him an F. Treasury is still spending like we're in a depression. We have 7% budget deficits at full employment. It's unheard of. It's going to be really interesting to see what's his name? I was going to say Frydenberg. But the Australian Treasurer, is going to do during the budget next week. What's his name? Chambers? Can't believe I can't remember his name. Whatever his name is. So we've got a cost of living crisis. That's what we're all saying. The Reserve Bank is trying to get a handle on inflation. They think they might. But what I expect is going to happen in the budget is the government's going to announce some significant increases in spending, which actually is inflationary. And that's what Druckenmiller is talking about here. They're spending a lot, the American government, and that is actually inflationary. And you don't want to do that. You want to help the Reserve Bank keep a lid on inflation if that is your goal. But a lot of governments around the world are doing the complete opposite. It's like a tug of war between the Reserve Banks or central banks and the government. So who's going to win? I have no idea again. And this is another reason why I think that inflation might be a little bit more stickier than we're thinking. Anyway, that's all I'm going to talk about when it comes to tweets. There was actually an interesting AFR. I wasn't actually taught about this. Taught about reforms rather than rate rises. This is from the AFR, and I absolutely agree with this. This little statement here they make. And when even the Reserve Bank of Australia starts willing unemployment to rise, have we actually lost the plot? I say yes. I say we have actually lost the plot. Having full employment in the company is socially desirable. In fact, that is one of the goals of the Reserve Bank. is to have full employment. It's full employment and stable prices, or lower inflation. And the funny thing is, to get low inflation, they believe you have to increase unemployment. It's what they're trying to do now. Whole reason, or one of the reasons why they're increasing interest rates, or have increased interest rates, is increase the unemployment levels. Because if you have more people unemployed, there's going to be less spending. The other reason they do that is so people with mortgages don't spend. But that's a fairly, inefficient method, because as I actually mentioned in this particular article, somewhere down here, what's worse is that raising interest rates gives even more disposable income to the older population who have paid off their mortgages, me included, and benefit from increased interest income on their retirement saving. So it's possible that uniquely in Australia, lifting rates may actually result in an increase in demand and put pressure on inflation. And I think that's definitely happening. Definitely happening. And at the same time, higher rates makes the squeeze on cost of living worse for the younger generation. So is raising interest rates actually an effective method of addressing the uneven demand profile in Australia, or does it exacerbate it? I don't think what they're doing now is a good way of doing it, an efficient, effective way of dealing with inflation. But this is what they're taught in university, probably what they get taught by their mentors, is the best way to deal with inflation is to raise interest rates. And I think that's an antiquated way of looking for it. And to be honest with you, it hasn't really worked, because it's not only demand side, it's also supply side. We've had supply side constraints, still affecting us. I sometimes go to the supermarket, and today I actually, wasn't today, last week or so, I've had trouble buying spinach. I like spinach in my salads. Yes, I do eat salads. Salads are nice if you do it right. And sometimes there's notices still saying because of supply issues, some of these products are not in the store. So there's still supply issues right now. I think they actually said it here, supply side shocks. So demand is half the problem. The current cycle of inflation has been largely supply led. You have to agree with that. And I think just dealing it, but just by raising interest rates, is just a really inefficient way of doing it. And the initial goal when raising interest rates was to increase unemployment. Unemployment hasn't increased all that much. So it hasn't really worked. It's just probably supply side shocks are not as worse as they were 1 or 2 years ago. Anyway, I went a little bit longer on that than I wanted to. So let's have a look at what is happening on the ASX today. A really quiet day. So this is now with about 45 minutes plus the 10-minute closing auction. Everything's down except tech. Results is down 0.35%. So let's have a look at the indices and sectors. Starting with sectors, industrials up. Industrials are performing fairly well. Real estate, IT up. Materials down. Discretionary down. Staples, healthcare, utilities, financials, all relatively flat. And tech has had the best day. Banks just behind the tech. And all the other indices are down. So let's have an expanded view of the indices. Surely there's a few other indices up, yeah. So mid-cap, okay. All tech. Real estate, okay. IT's okay. I'm just going to go to the ASX 20 just to see. I'd assume, I'm going to assume here, so it's relatively flat, the ASX 20. I'm going to assume half the companies are up, half the companies are down. So 10 companies up, 10 companies down. That would be statistically what you would expect, not necessarily what has happened. So 11 down, 8 up, 1 flat. I forgot about there is a possibility a company could be flat. So best performing companies today have been Transurban, Santos, QBE, ANZ, Woodside, Woolworths, Commonwealth Bank, WiseTech. So most of those companies, apart from WiseTech, are companies I'd probably never own for the long term. I even call some of those companies low quality companies. While the worst performing companies today, NAB. It's really weird. We had some banks up the top, some banks down the bottom. Maybe NAB, because they went ex-dividend yesterday, some of those dividend chasers are still selling out, which is a stupid way to invest, in my opinion. That's just my opinion. And based off Fortescue, Rio Tinto down, I'm assuming iron ore is down. And Goodman Group is really weird. Goodman Group today, which did not make it into my top 5 announcements, it should have. Goodman Group released a profit upgrade. Share price is down. So obviously the market expected a better profit upgrade, but really interesting share price action with Goodman Group with it down on a profit upgrade. You very rarely see it. I might show you the chart for Goodman Group at the end of the video. Okay, let's have a look at the best performing companies and the worst performing companies. Let's have a look at top losers today. Top losers based off share price performance. Osteopore. I just think that company is just it's just a plaything of day traders right now. Share price down 61%. That seems a lot. So they must have released something today. Of you would think. They did a capital raising. So they successfully raised 2.9 million. So it probably has something to do with his capital raising, I'm assuming. But just look at the chart. Oh, geez, share price has fallen all the way back down to where it was before this massive spike in share price on the 27th of March. That's an ugly looking chart, in fact. So you'd probably be hating this company if you did not sell before today. Now, share price has fallen to 12 cents. Was as low as 6 cents. Was that right? As low as 6 cents today? As low as 4 cents today? That's insane. Share price has tripled from the low today. Share price at 10:09 a.m. was as low as 4 cents. Now that's ridiculous. This is a plaything of day traders right now. And I should continue to stay clear of Osteopore. Otherwise, Metro Performance Glass, yeah, most of these companies are on low volume. Nothing of interest there. We have Rincon Resources again. I have stopped really following that company. Again, I think that's a plaything of day traders. By market cap, Perpetual did make it into my top 5. Funny enough, I did not rank these. I should have ranked the top 5. And I'll think about ranking these companies as I talk through the rest of the video. Possibly Perpetual should come in at number 3. How am I going to do this? I'll do, Perpetual come in at number 4. Okay, we'll put at number 4. Index down. They did release something yesterday. Down again today. Company I like, Genus Plus, is down, but that could be it's fairly low volume. Nothing to be concerned there. Otherwise, SKS Technologies is down, which is understandable because that company released a pretty good announcement yesterday, what seemed like a good announcement yesterday. Share price actually rallied on open. Oh, that's the wrong company. Shinko Electric Industries. Completely wrong company. So share price of SKS Technologies rallied on open yesterday, but then they were selling through the day. And that was actually a fairly bearish sign, and the selling has continued in today. Share price down to 66 cents after being as high as about 83 cents yesterday. Possible buy the dip opportunity for those interested in that company. And other than that, nothing else exciting on that list. I have a feeling the other 4 companies in my top 5 announcements might have made it into the top gainers of the day. So let's have a look. Top gainers, ICL, Iceni Gold, Iceni Gold, up 356.52%. Should I make that the number 1 company of the day? I am going to say that Iceni Gold, based off 356% rise, even though I don't know much about the company, is the number 1 company of the day. They did release an announcement, and just based off the market reaction, I'm going to put that at number 1. Larvotto Resources didn't make it in the top 5. I'm going to put that number 5. Share price up 33%. The other 2 companies may not be here yet. I'm going to have a look at by market cap. Pinnacle, there is Polynovo. We'll put Polynovo as number 3. And the other company I expect to see here may not be here. I'm going to put the company number 2, and that's AUB Group. They did release a date to their guidance last night. Some other interesting companies here. Quantum Intellectual Property did not make it into my top 5, and they are undergoing a takeover bid. And there is a new player for that company, and that player is a company listed on the ASX called IBH, and a slightly bigger takeover bid than the previous one. That's why the share price is up 6%. Otherwise, I don't remember any of these other companies releasing an announcement. Pinnacle Investment. Wonder why that's up. I was almost trading this company, bought in on dip. this little dip here, almost bought that. And they did have a presentation last night. There's one thing I've noticed today, a lot of Macquarie Australia conference presentations, announcement released today, or in fact yesterday as well, maybe in the last few days, and a lot of these presentations have been marked price sensitive. And some of these companies have included some trading updates. So yeah, so maybe that's why share price is up, because of this presentation. Maybe there was a trading update in there. I did not have a look. Okay, so let's have a look at the top 5 announcements of the day. But before I get there, what companies did not make it into the top 5? So we have Platinum Asset Management. They released funds under management. I thought that company might have gone down a fair bit, but I have a feeling no, just a little bit. A significant decrease in the funds under management. I've already mentioned QIP. In fact, what I'm going to do is just show you the charts. How about doing that? Instead of going through the company's announcements, I'll just quickly go through the charts and see if there's any company I'm interested in this group. So Platinum Asset, definitely not. An ugly chart. Quantum Intellectual Property. I've already talked about the takeover bid for this company, and that's the chart. So I bought at $5, sold at $62. Share price now up to $1.78 with this new takeover bid from IPH. Jumbo was one of those companies that did release a presentation at the Macquarie conference, and I think there was a trading update in there, but I did have a quick look to see how the market reacted, and share price is virtually flat. DHG, which is Domain, also went to that presentation, and they also released, I think, a trading update. Could be mistaken. Share price down. ABB, Australian Broadband, did release a trading update, but market was... yeah, it wasn't. Oh, geez, look at the ABBs here. Do stocks. There we go. And share price of Australia Broadband rallied quite nicely the other day. A company that is in my portfolio, and share price down a little bit. So market didn't really react to that profit or trading update. And APM, a company I'm following a little bit more closely, also released a trading update today. Did not quite make it into my top 5, and one of the reasons why, share price flat. If the share price rose 10%, probably would have made it into my top 5 announcements of the day. And two more companies. Leo Lithium, which has not traded for many, many years, maybe not years. Last time it traded was 14th of September 2023, so not quite a year. That's an ugly chart. What happened? What happened to this company on the 4th of September? That was a sign to get out. After share price was on a beautiful rally. Anyway, it looks like they sold something. So maybe they're going to go back to trading. So have a look at Leo Lithium if you are a shareholder, but they're not trading now. And finally, Goodman Group release a profit upgrade. So, and this is in terms of earnings per share. I think it's underlying earnings per share. Went from, they expected, last time they updated the market, they expected underlying earnings per share to be 11 cents per share. Now it's up to 13. So you would expect a positive reaction from the market, but in this case, no. Share price actually down a little bit. And that's after a nice little rally. I'm just thinking the market expected it. This is a brilliant looking chart, beautiful looking chart, but I just think maybe the market expected, why does it want password? I just think the market probably expected this. And that can be the problem of some of these big cap companies that because there's a lot of analysis, who follow the company, do their own analysis, and sometimes when a company does release a profit upgrade, you don't see the market reaction because it's already priced in to the share price. That's another reason why I really like small cap companies or smaller companies. You have a dearth of analysis following those companies, and when they do release a profit upgrade, it actually does surprise the market, including analysis. And that's why sometimes the share price might rally 20 or 30% on the back of a profit upgrade. And you see that also with a profit downgrade. All right, so let's have a look at the top 5 announcements of the day. And the first one we're going to look at is Larvotto Resources, up 45.8%. So maybe it should have been higher. And interesting enough, the share price is right at a very important level, 10.5 cents. So it's probably been oscillating above and below that all day or for a lot of the day. We'll have a look at the chart later in the video. They did release an announcement, sort of announcement I never pay attention to unless I see a really good reaction from the market. But even then, I more than likely will not take a position in this company. Now, funny enough, when I saw this title of this announcement, because I do have a holding in a company called Hillgrove Resources, and I saw high-grade gold results at Hillgrove, I was like, is that in relation to the company I own? No, it's just the name of their project. I have tried to learn how to read these sort of announcements, but I won't say I've given up. I will spend maybe a little bit more time. The one thing I did learn was you want a big distance of high grades. And so this BKC 015, 31 meters at 65.8 grams per ton of gold. Seems like it is a fair big of a hit. Big hit. It's a fair bit of a hit. They even mention it's a standout result. So just based off that, I sort of can understand, and also how deep it is. So it is fairly deep. So that is one thing I do remember. One thing I do remember reading was if you see 100 meters at a fairly big hit, that is a significant result. So not quite that big, but still 65.8 grams per ton is, or seems fairly high to the amateur that I am. And that's probably why the share price has run up. In fact, it opened at 9 cents, has gone to a high of 11 cents. So there was excitement in this company from the get-go. Now, one of the reasons I've also included this company is just the chart. The chart actually did look interesting. So this is the daily chart. Share price had been in downtrend. There's a lot of interest in this company back in April of last year. I think I sort of remember that, and maybe that's the reason I do remember this company. But that's interest died away fairly quickly. Share price moved back into downtrend. But we started to see some interest in this company. I'm just going to do this. That's better. We started to see some increase in interest in this company around about March. Share price started to rally on okay volume or increase in volume. There was this nice little dip before this announcement and some really big volume coming today on this particular announcement. Share price around about 10.5 cents. And you can see the share price really struggled to get above 10 cents back at the start of April. Share price got to 10 cents. In fact, it went to a high of 10.5 cents and then pulled away and fell all the way back down to 7 cents. So let's have a look at the 1 minute chart. So there's 10 cents right there. It is struggling. It is definitely struggling to get above 10 cents. But I think the more times it hits 10 cents and pulls back, the more likely eventually it's going to break through, because a lot of those selling out at 10 cents because it's a psychological barrier for many investors and traders. And the less of those investors or speculators in the company, then the more likely it's going to have a chance to break out above 10 cents. I have seen that before. The more times it hits a breakout or a significant resistance or support level, the weaker that support level or resistance level becomes. I have heard the opposite, but I think it's the weaker it becomes, not stronger. And yeah, so last time we looked at Comsec, it was 10.5 cents. So possibly it has broken through. Possibly this is it. Maybe it has broken through. So on the surface, this looks like a pretty good announcement, just because at 1 grams per ton of gold at a fairly deep depth. What's the market cap of this company? Let's have a look. That's one thing I didn't actually have a look. So the market cap of this company is only 24 million, so it's fairly low, and the share price has dropped 53% in the past year. So coming in number 5, we have Larvotto, company I don't or have never had a look at before. Don't even know where their project is. Let's have a look if they've got it. Let's have a look if they talk about their project here. Oh, it's near Armidale. It's in the so it's probably the northern tablelands of New South Wales. Can't see any other towns here. So east of Armidale. So maybe on the ranges there somewhere. I'm assuming that's Armidale in New South Wales. About Larvotto. Yes, it says New South Wales there. A gold antimony. Antimony? I have no idea what antimony is used for. And they also have projects near Mount Isa. And projects in West Australia. Oh, and projects in New Zealand. They've got projects all over the place. Oh yeah, so if you liked what you heard about in that particular, and I'm not trying to sell this company at all, I'm just sharing ideas with you. If maybe you're a gold bug, well, if you're probably a gold bug, you already know this company anyway. Oh yeah. Coming in number 4, we have PPT, which is Perpetual Limited. Share price down 7.2%. Now, the story of Perpetual goes all the way back to December. And this is very important. Oh, yeah. So on the 6th of December, Perpetual announced a strategic review where they were going to spin out their wealth advisory and something else. I forget what the other one was, corporate transaction or something like that. In fact, I'm going to open up that announcement. I'm thinking, yeah, they do mention here. So they're going to separate their corporate trust and wealth management business. Okay. That was on the 6th of December at 8:50 a.m. Later in the day at 4:41 p.m., there was a non-binding indicative, how do you pronounce that? Proposal to acquire Perpetual from Washington H. Soul Pattinson. And this is very important, what Washington H. Soul Pattinson wanted to do. So they wanted to buy 100% of the company, Perpetual, but this was really interesting. And I did find this really interesting. And this sort of gives us a gauge of what the more valuable part of Perpetual's business is. So this is what WH Soul Pattinson wanted to do. Okay. So WH Soul Pattinson would retain 100% of the Perpetual Wealth Management and Perpetual Corporate Trust businesses in exchange for WHC shares, as well as assume responsibility for all group net debt and stranded group costs. So what they're going to do, the other part is undertake a simultaneous demerger of Perpetual Asset Management. So WH Soul Pattinson only wanted the wealth management and corporate trust business of Perpetual. They didn't care about the other stuff. They only cared about those two parts of the business because they found there was more value in those two parts of the business. And the implied value of this particular takeover was just above $3 billion, with the PAM, which is the Perpetual Asset Management, worth an estimated $2 billion. So that's what they wanted to spin out, I think. Yeah. Okay. Now, that's the history. And just after that, Perpetual said, we think shareholders, you should reject this proposal from WH Soul Pattinson. And in fact, you can see this in the share price. Share price popped up and then they rejected it and the share price has pulled back. And what has happened today? So don't forget, Perpetual announced a strategic review and they said what they wanted to do. And then WH Soul Pattinson said, look, we've seen what you want to do and here's our solution. And this is Perpetual's solution. They've announced it today. Here we go. Perpetual concludes strategic review. Now, I'm not going to open up that particular strategic review because it's 216 pages. So I'll just open up the investor presentation. You'll notice that the share price down 7%. The market does not like it. The shareholders do not like it, I'm assuming. And what they're going to do, they already hinted they're going to spin out what WH Soul Pattinson wanted, and that's exactly what they're doing. So they're going to spin out the wealth management and corporate trusts via scheme of arrangement for $2.175 billion. Does seem attractively valued, but again, that was, according to WH Soul Pattinson, the most important part of the business. And that's what I'm assuming right now. And then they're going to become, after they get rid of that, or sell it off, they're going to become just a asset manager, I suppose. They call themselves a global multi-boutique asset management business. I'd be a little bit wary about this because you want to listen to what WH Soul Pattinson wanted. They was pretty specific on what they wanted, and Perpetual is getting rid of what they wanted, and now they're going to be just an asset management business. So I think they're getting rid of the best part of the business. That's just my opinion based off WH Soul Pattinson. I'm not even sure what the overall value of this is. It a little bit more than what WH Soul Pattinson was wanting, probably. Anyway. And so the market didn't like it, and let's have a look at the chart. And you'll be able to see why maybe some shareholders are a little bit frustrated because the value of WH Soul Pattinson or takeover bid was it $27 or $28? And now the share price is $22.36, significantly lower than what it was in December. And you can see when that announcement, the takeover bid was announced, the share price went up to $26.50. That was actually before they announced it. Then the next day, share price went up to as high as 25.70, and about a month later, share price got to just shy of 26.50, which was an important level. I still remember this. 26.50 was an important level because that was the hard highs we saw back in July. Now the chart looks pretty negative, and yeah, the market doesn't like this at all. Share price down 7%, and yeah, I think a lot of shareholders would say, why did you reject Dalhousie Patterson, which share price would have been higher now than 22.35? There should be questions asked of Perpetual management. My opinion, just based off what's happening. I've seen this a few times over the past few years. A company management rejects takeover bid, and then the share price significantly drops. And then a few of those companies have done capital raisings. Yes, I'm looking at you, Big Tin Can. Maybe even ERO did that as well. It was a takeover bid. The management said, no, this undervalues the company, but we're going to do a capital raising at half of the takeover bid, which means we're valuing the company really low as well. Anyway, I'm a bit cynical about those deals. Okay, coming in number 3, we have Polynovo, up 8.7% on 2 announcements. I suppose the Macquarie Australia conference presentation was not market price sensitive, but you know what was market price sensitive? Performance update. First, $9 million sales month and $10 million revenue month. So sales and revenue, what's the difference between sales and revenue? Interesting. The market's reacting to this. I don't necessarily would absolutely react to this as an investor, because we know their revenue is growing. We know it just by looking at the data. And so they have got to a monthly milestone, I suppose. That's why they've done this announcement. It's a milestone. Highlights, US business, monthly sales of 6.9 million, up 75%. Rest of world, monthly sales of 2.4 million, up 68%. Total group revenue for the month, including barter, was $10.1 million, and that's the milestone, $10.1 million, up 68.6%. This is a well-liked company in ASX circles. The reason I know it is because I don't think the company is profitable just yet, but the company does have a market cap above $1 billion, and the chart has been looking good. Nice chart. I wouldn't be selling this. I have been trading this. In fact, the market cap is 1.4 billion. So after today, the market cap is probably going to be 1.5 billion. And yeah, the revenue has been growing really nicely, up to $65 million in 2023, but was not profitable. Now, on the half year, they were profitable in the first half, 2.7 million, according to Trading View. So an okay announcement from Polynovo. I do think the markets are reacting a little bit. I fully expected this sort of performance from Polynovo. The only questions I have about this company is just the valuation. Otherwise, if this company had a market cap of 141 million, I would be a shareholder of Polynovo instead of trading it. So that's coming in number 3. We have Polynovo. Coming in number 2, we have AUB Group. And this is another company that released sort of a profit upgrade. Share price has increased up to 1.9%. It's understandable. We haven't seen a significant rally in the share price. So they released their earnings guidance at 4:47 p.m. last night. So this is another announcement that was released the previous afternoon after I did my previous video, or that day's video. So previously their guidance was, this is in regards to UNPAT. I think I mentioned for another company, underlying net profit after tax. So that was AUB Group. So they expected underlying net profit after tax to be between 161 and 171 million. So what would analysts do is they'll put those two numbers into their valuation machine, and then it spits out a number. And what AUB Group have done, they've said they do forecast now or expect UNPAT to be towards the top end of their outlook range. So more likely 171 million than 161 million. So what analysts should do now is, when they do their valuation of the company, maybe ignore those little permutations where they had the UNPAT at 161 million. So realistically, some of the analysis valuation of this company should have increased based off this information. That's why the share price should rally. That's what should happen. So yeah, things are moving in the right direction for this company, as we expected. Now, if we do have a look at the chart for AUB Group, probably, and by the way, I am a share of this company. If you do have a look at the chart for this company, it's just a chart. It's a beautiful uptrend. If you look on the weekly chart, I would assume it's still a beautiful uptrend. Yeah, really good uptrend on the weekly chart. So no end in sight there. Daily chart sort of going sideways right now, sort of trading in a range between about $27 at the bottom and about $32 at the top. So right now it's in between the bottom and top of the range. And yeah, I don't have any complaints of this company. For those who don't know, this is an insurance broking company. And in fact, I would never own insurance companies for the long term, but I would own insurance broking companies for the long term, because they're much safer, much less risk in these sort of companies. Sort of like Visa and MasterCard. I'd much rather own Visa and MasterCard compared to, say, Zip, Afterpay, all those companies, because they're taking on a lot more risk. Visa and MasterCard just, take a bit of a clip from all the sales without the risk, sort of like AUB Group. But the chart is doing nothing for me. Even though I'm a shareholder, it's doing nothing for me. I will trade this if I see breakout. Okay. That is AUB Group coming in number 2. And coming in number 1, we have a company whose share price has risen a lot. Now, it might be quite volatile. So even though in market index, it says it's up 356%, share price is at 10.5 cents. In fact, let's just update that again. It's up 330%. Share price now at 9.9 cents. So it's right at that 10-cent level again. Very important level. So this is a company called Iceni Gold. So let's have a look at the updated trading for Iceni Gold. Up 308%. Down below 10 cents now at 9.4 cents. Share price opened at 3.9 cents. Yes, today you could have bought this company on open at 3.9 cents and doubled your money. So I'd say there would be day traders in this right now. And I'd say maybe not on open, they got interested, but just after open, when they saw the share price rally, that's when they might have got interested. High in the share price at 11 cents, low 2.8. So more than likely just after open, share price, so previous close was 2.3, share price opened at 3.9. There might have been a little bit of selling because of previous owners. I haven't looked at the chart yet. So I'm assuming the share price has come down a fair bit over the past 2 years. The shareholders saw the share price open at 3.9 cents. They saw the opportunity to get out of this dog stock, and that pushed the share price, that increase in supply of shares on the market, pushed the share price down to 2.8 cents. And then for some reason, someone got excited and the share price went from 2.8 cents to a high of 11 cents. Someone could have made a quadruple bagger or 4-bagger out of this just today, or very close to a 4-bagger, if they bought at the low and sold at the high, which I doubt happened. Maybe one person did it, but anyway. So what's the announcement that caused this excitement in this company? It's not often you see a share price rise 308.7%. Christmas gift, sheer gold discovery, updated announcement. So okay, no, that's at 144. So the announcement was spectacular. Vein gold discovery expands Christmas gift shear. All right, so let's open this one up and see if they do give us any drill results, like depth, how deep it is, depth, and grade. Let's see, and we can compare it to the other one. I don't know about that. That looks weird. Previous high-grade chick results, that's 18,000 grams per ton. I mean, are you just looking at a little chip? It's going to have massive amounts of gram per ton if you're just looking at the chip. All right. So this is the sort of announcement, goes over my head. There's no, what I can see, it's just these little, it does look like nice gold in there. Where's their project? WA, the Leverton Greenstone Belt. And this company doesn't have a low market cap. It's actually at 24.4 million today. This is after the rise of 330%. So at the start of trading, share price would have been like, or the market cap would have been like 8 million. So yeah, this is the sort of announcement I would just ignore. Personally ignore, because I think day traders are in it. You're going to see a lot of volatility in their share price. And unless you're willing to pay attention to the chart every single minute of the day, yeah, I would be completely out of this. So let's have a look at the chart for, I'm forgetting the name already, in Iceni Group, Iceni Gold. Okay, so yeah, I mean, the share price has been a downtrend, a lot of volume today, another sign of day traders. Share price has jumped a lot, as we've noted. But if we have a look at the 1 minute chart, you might see, you probably will see. So the share price went to its low at 10.53. So that's actually a fair bit after. In fact, in the first hour, there's very little trading. And the share price went from 3.9 to 2.8. That's another reason why I think there wasn't that initial interest in this company. Even though the share price went to 3 or opened at 3.9, share price actually fell. So there wasn't this interest. But then all of a sudden, am I looking at the wrong day? I'm looking at the wrong day. That was Monday, the 6th of May. Share price went down to 2.3. So I'm trying to find when the share price went to 2.8. It's very hard to see on this. Yeah, we didn't see very little volume in the first few minutes of trading. The volume came in at 10.08. That's when it really started. And we have seen decreasing volume during the day, but heightened volumes is just telling me this is a plaything for the day traders. Got above 10 cents at 252, went to 11 cents and fell straight back down below 10 cents. Again, 10 cents is a very powerful resistance level or support level for any. I can't see where it went to 2.8 based off this. And I can't look at 1 second information. Maybe ComSec. Maybe you can see it in ComSec. Let's have a look at the chart. ComSec. 1 day chart, 1 minute chart. So according to this, according to this, you just, shares were suspended for a while. It went down to 2 point, I still can't see it. Shares were suspended for a while, for about 3 hours, according to ComSec. And let's go back to the announcements. Okay, pause in trading halt. So shares were paused at 10:45 a.m. Completely missed this, and they went back to trading at 1:44. So there's 3 hours where there's no trading. So if we go back to, and that's why I actually sometimes do like ComSec, because when there's no trading, you can actually see that in the chart. So you'll see a big gap like this. It's a massive gap here, and when they came back out of trading, share price just popped up. So it could have been that second announcement that caused the next spike of interest in that company. But if you have a look at trading view, you don't see the gap. It fills in the gap, fills in that time period. And that's my one problem with trading view. Maybe there's a way to fix it, but you don't see it here. You don't see the gap in time there. Anyway, so interesting day for Iceni Gold. I have no interest in this company, but again, it's all about me sharing ideas with you. If you like, have a look at this announcement. If you like what you see, maybe this is a trade for you. Share price now at 9.3 cents. Okay, so let's have a look at a few charts in the last few minutes of this particular video. We'll start with the Luca. This is possibly my next trade, my next buy. Possible breaking out here. A little bit of selling today and a red candlestick. That's not necessarily a bad thing, but this does look much better. Yesterday, share price rose about 5%, and the share price got to $8. And the last time the share price was $8 was way back in October. So not quite a 6-month high, but the chart just starting to look better. This is sort of a chart I am starting to look more and more for. A bit of a turnaround, shift in sentiment, turnaround in the trend, and I definitely see it with Aluka. Probably another thing I should mention is I had a look. Actually, I'll talk about this in tomorrow's video, but at the moment, if I look at my whole portfolio, 20 to 25% of my portfolio is trading. The other 75% is in either quality companies or small caps that I'm not trading. And I want to reverse that. I want to trade more, because at this point in time, my trading portfolio is up about 57% for the financial year, significantly higher, better returns than my other two portfolios. And if I'm being honest, I should spend more time trading. And one of the reasons I have come to this conclusion is because of a video I watched yesterday, a self-wealth video on this trader. He actually showed his portfolio, what he does. He showed the charts, what he does, very similar to me. Now, it seems like he's more disciplined when it comes to selling. He doesn't sell I tend to sell a little bit more. I'm just thinking of MMA offshore. He's held it for like the last 2 or 3 years. In that time, I've sold and bought MMA offshore about 2 or 3 times. And I think I am selling a little bit too quickly. That's what I'm thinking. And if I go more to 75% trading, 25% long-term holds, then I'd probably be able to fix that. I'm thinking I can get around that. So this is sort of chart I'm looking for. Luca Resources. What was the other one I was going to show you? I completely forget. Luca. I completely forget now. What other charts can I show you? Can I show you? Oh, Disney. No, I won't show you Disney. Let's have a look at a few companies in I watch every single day. There's a look at down the bottom. And what else? Nickel Industries still looks pretty good. Mineral Resources still looks pretty good. A little bit of a dip today. AMC or Amcor, this looks really good. I should have bought on the breakout the other day, but that's okay. And that's another reason why I'm thinking of just shifting how I'm investing or trading, is because if I was doing that, I would have bought Amcor, but I thought, no, I'll just let this one slide. And yeah, share price keeps going up. And I think that's about it. I think that's about it for now. Some of these companies I won't, and I'm going to have some rules around this. So like a company like Tyro, I have played the buy the bounce, and it would have worked for Tyro. Share price got down to 85 cents, or very close to 85 cents on the 22nd of April. And I was thinking this should bounce, and it has bounced. It played how I thought it. But in my new strategy, what I'm going to do, more than likely, I won't play these sort of scenarios because these are very short-term plays. I could do it, but I'd rather the longer-term play. I want to hold companies for years as they continue in an uptrend. That's the ultimate goal. I was going to buy Paragon Care as well. There's a little bit of dip the other day. Here's the dip. A little bit of a dip. That would have been a perfect point to buy at 13 or 32 cents. Anyway, I think that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.